welcome to another Major Market Movements End of the Week Market Review for October 2nd, 2015. I'm Quad G. In this video, we're taking a look at some of the peripheral markets, basically all the markets outside of the PM complex and the Forex markets. And we're taking a look at the Nikkei here, LA wave count, and what I suspect from what I can see here, I think what's going on here is possibly we got wave 1, 2, 3, a wave 4 as a flat that didn't alternate with wave 2, and then maybe a choppy ending diagonal to the downside with a 1, 2, 3, 4, 5 complete. And now we're working on a correction to the upside. Looks like wave 1 or possibly a wave A to the up is finished, and now we're working on a wave 2 or B to the downside. And 2, there's a chance that 2 is finished right here, and this isn't a wave A, but at least I still leave open the possibility that this is just an A working on a B up right now, and we might get one more push down into wave C before to finish wave 2 or B, and then another push higher into wave 3 or C to come. So that's what's looking most probable at this point, while the market is above key support at 16,890. Break below that, and it's hard to say what's taking shape here. This choppiness is not, it lends better to the idea of an ending diagonal to anything else. So it would be really hard to count it if this was to break. It'd be hard to determine what exactly is taking shape there, but I'm fairly certain, though, if we did get a break there, it would be dropping fairly quickly. Let's take a look at the Russell 2000 using the ETF EotWM for some close-up work in the 1 hour chart. It does look to me as though we've got a wave 1, 2, 3, 4, 5 down finish for a wave 1, got a wave 2 sharp, wave 3 down, and now we're working on wave 4, which I was expecting to alternate as a flat correction and then have another push down into wave 5. But with today's move to the upside on today's bad employment report, I'm suspecting the stock market is making a bid on the idea that the Fed is going to be forced to come out with some more easing, and that might be one of the reasons that they're buying it up on that rumor. So wave 4 could still be a sharp, but this could also be something else entirely as well. It could be an ABC down, and we're working on another corrective move to the upside. The key level of determination is going to be there at the critical resistance of 1187. Break above that, and you could no longer call this reasonably call that wave 4 anymore. It would have to be something else. So we'll see what happens. The market could be just coming up to fill this this manic drop also, which started there at about 111.40 or so. So that's another objective that the market may be wanting to take care of before resuming the downside. The NASDAQ here, this is NASDAQ count. This is, again, we're into this choppy move to the downside, and the only thing that really pops up to me, well, let me back up. We got the wave 1, we got the 2 flat, wave 3, we got a wave 4 sharp, so that alternates nicely with the flat. Wave 4 did not violate the price territory of 1. But this leg down from wave 4 is certainly very choppy. It's looking more like a ABC to the downside. So that, though it's still very early to be certain, I would say that this is wave 1 to the downside of a possible ending diagonal. An ending diagonal being a series of 5 waves. Usually, each of those 5 waves are three wave moves. So we got our first 3-wave move to the downside, that's wave 1. We got a 3-wave move potentially up here into wave C of 2, which may come up to challenge the wave B high. And then from there, fall off again, another 3 waves to the downside for 3. And wave 2 is probably sharp, so wave 4 will probably end up being flat, the 3-wave flat correction. And then from there down into the final 5th later on, possibly into November, possibly. That's what's standing out as the most probable count that I can see. A key level of resistance here. Let's move up to the daily real quick and get my trend line tool in place. I'll put it on the log scale, and we'll shoot a trend line from the end of wave 2 to the end of wave 5 or 4. There. That's going to be a key level of resistance as well for this move to the upside. If we see wave 2 breach above that trend line, then it slips out of the probability of this being a wave 2, and it's something else. So another key level resistance, and currently that line is just up ahead there at 43.82. So I'm still bearish on this market, but I would be watching for potential topping action next week. Also in place here is a head and shoulders pattern. Here's a left shoulder, left neckline, head, right neckline, and now we're working on the right shoulder. And once that's finished, it can be dropping on down from there. All right, let's take a look at the Dow. This is YM, it's a mini futures contract for the Dow. It's the one that TradingView can give me, that gives me some sub-daily detail. And I'm also, much like the NASDAQ count, I'm seeing a wave 1, wave 2, wave 3, wave 4 sharp. And now, because of this choppy move to the downside, this is looking like a wave 1 of a possible ending diagonal count. Working on wave 2, which may finish next week. And again, I'd want to see that wave 2 stay below that purple trend line, that dashed purple trend line. I can finish up a right shoulder, and then from there, you see another push down into 3, 4, and 5 for some kind of ending diagonal count to the downside. That should, I don't think would have any problem reaching down into possibly the 14,000 level, upper 14,000 level, before it stops. Here's the BKX, a banking index. It was moving along nicely, but this hammer candle at the end of this downtrend, that's kind of throwing me off here. I'm really not sure what to make of that. Maybe it's just a fake out move, just sympathetic to what else is going on in the stock market. Obviously, the banking index is in a deeper hole than the rest of the indexes. It seems to be leading the way to the downside. So the EotWMR count, though, right about here is starting to get a little messy. Lots of chop. So we're just going to have to wait and see on this. I would say 70.92 is a key level of resistance, and so is this purple trend line here. Also another key level of resistance. So I'm just not really certain where this is heading. I would say, however, that today's low at this end of this hammer candle, that low at 66.70, is a key level of support and a potential breakdown point. I think you can see the market unravel if you see that level broken possibly next week. So be on the watch for that. All right. And here's BKX on the longer count. I've got a few new subscribers that are not familiar with my longer term counts, and these videos is where I like to showcase these counts because it's really easy to just quickly go over. So from the 2007 top in the BKX banking index, you got a wave A down, sharp wave A, and then you got a B, C to the upside that looks finished, and now we're working on a major wave C to the downside that could come all the way down here and move below wave A. So there's a considerable amount of droppage potential there coming into the future while we're below wave 5 here. Also want to point out that even though the Dow and the SPX and the NASDAQ and what have you have gone on to higher highs, all-time highs, the banking index has yet to put in, it's just made a three-wave corrective move, a tired move to the upside. So this tells me that the banking index should be helping support a major advance in the stock market, and this go around, it is certainly not. So that's, I think, an indication of general overall weakness in the stock market compared to decades in the past. And I think it's going to end up becoming a very difficult, very dangerous time going forward with a breakdown in the banking sector, which should cause a breakdown in most other sectors because of the intense amount of capital and intense amount of leverage and debt that we have in this economy, to the point that we become addicted to it in order to register any kind of economic growth in this economy. So if the banking sector is not supporting further growth, as I see here with this Elliott wave count, I think it just again is a nail in the coffin for the broader economy, possibly for many years ahead. I could obviously be very wrong here. My Elliott wave counts aren't 100% accurate or perfect, but this is what's coming to mind as I'm looking at these charts. U.S. oil. Now, this market continues to toy with us. Yesterday we did have looks like a three-wave move completed for wave E of B, and we're working on wave C to the downside. And normally with that kind of expectation, you're looking for an impulsive move that's going to come down here and take out the extent of wave D right there at 43.69. Well, instead, we'll zoom in here. We get a three-wave move down, ABC, to the downside, and it stops right there at the lower orange trend line, and then we get another bounce to the upside. So what the heck is going on? Well, we're getting deeper into triangle territory here, and it is possible, though it's very rare, for there to be waves F and even G going forward. And maybe that's exactly where we're at. This is where it gets very confusing, and I'm because of this, I'm glad that we have a straddled position set up. So if it breaks to the upside, we'll gain. If it breaks to the downside, we'll gain. If you're trying to straddle with options, that's fine. You just want to make sure that you give yourself lots of time. You want to be probably way outside the money and a few months down the road in your contract. So, another way of looking at this, let's pull this apart a little bit, is we could still be in the bullish triangle. We could be a wave A, B, C, move D back where it was, and we put E back down here. This could have been an F, and this could be a G. That's certainly plausible. Again, with this many choppy three-wave moves that are contracting, it gets to the point where either possibility becomes certainly worth considering. And again, a good place to be straddled in my estimation. Okay. Um, let's move on here. Here's coffee. This is a short-term count. We got this impulse to the downside finished. Got an initial wave one up, and my expectation for wave two isn't playing out exactly as I thought. We do have a position loaded up, but there's a couple different ways that this could play out. Either wave C is done with a contracting flat here, kind of a stealthy contracted flat for wave two with an A, B, C, a very short little C finished. That has potential. The other thing that I can see is we've got an expanded B with an A and then an A, B, C up for B, and then from here we can get one more leg down into C of 2. Really, either one of those counts, I would give either one of those, coin flip as to what we're going to get. Whatever the case, it's good to be holding on to longs. Even if we do get that dip down into wave C, that would be fine. That if you're interested in loading up a little bit more, that would be fine to add on to your position with a move down into C, a lower C. But for now, it's best to be holding on to those long positions because it could very likely just start to sprint up into wave 3, which may find its way all the way up here into 138, maybe even 140 levels from where we're at. A considerable jump. Okay, that's going to be it for the peripheral section of the end of the week market review. I hope you all have a great weekend, and we'll be talking to you later. Adios.